Well, good afternoon, everybody. Phil Simons and Sam Oden here with your weekly grain market recap. I was able to attend the Montana Grain Growers Annual Convention earlier this week, and it was wonderful to be part of that event. Next week, we're going to have Justin Beach, Kerry Williams, and Justin Smart out in Billings, Montana for the Montana Organics meeting. So be sure to stop by and say hi to them. But like I said earlier this week, I was kind of out of pocket and really didn't see what was happening to the markets much. But Sam was going to give us kind of a rundown in terms of what happened this week.
Yeah, well, you picked quite a week to be out. We did have some new developments. First, and one of the best news that we got this week was that Biden signed a document blocking the railroad strike. So ultimately, what performance looks like from the railroads over the winter is to be determined. But we do know that we will not have a formal strike from the railroad unions yet.
Good news.
Yeah, in other news, we also saw an update to biofuels blending mandates. Things came out with a more lenient blending policy than was expected by the market. So as a result, soybean oil weakened, and as a result, that pulled soybeans lower for the day anyway, but they did see some strength throughout the balance of the week. So on that topic, Phil, if you want to hop over and show us the weekly updates for prices.
We're going to share our screen, and we're going to navigate to our most favorite website again, ColumbiaGrain.com. And over on the right-hand side, if we just navigate to Producer Solutions, again, that's where we highlight all of our latest information in terms of market driving news. But if we take a look at the weekly price ranges here, this is what Sam was just talking about.
Yeah, so what's a little bit surprising, as you can imagine, just looking at weekly net changes, is to see that the bastion of the grain complex was soybeans, even though that's, in theory, what maybe received the most negative news over the week. In the wheats, we've seen a consistent slide lower alongside a lot of volatility. But since the beginning of November to now, we've actually pulled roughly 75 or 80 cents out of Kansas City hard wheat futures and maybe 50 out of spring wheat. So we've seen some distancing between those two different classes of red wheats. And kind of moving into that, I guess we could talk a little bit more specifically about spring wheat. If you'd like to go to market exports.
Yeah, let me pull that up here. Let's go back over here. It was just a second. So yeah, take a look at the spring wheat exports by destination. Here we go.
Yeah, so I had mentioned that spring wheat has put some distance in futures anyway between Kansas City hard wheat and Minneapolis Grain Exchange spring wheat. And what that's done throughout this year has really had a big impact on what export sales look like out of the U.S. And it's also had an impact on domestic markets. So speaking to exports first, what really jumps off the page is you can see our major customers, and that's Philippines, that's Mexico, that's Japan, Taiwan, Thailand. And we've seen some pretty material changes year on year for total consumptive demand from those destinations. Namely, Philippines have been down considerably. And that's largely as a function of a large and relatively inexpensive Canadian spring wheat crop. And the Philippines have moved a lot of their needs to Canada instead of the US PNW.
Sure.
But the good news for spring wheat is that that's largely been offset by Mexico and Nigeria, and Iraq is another one. The reason that we've seen an uptick in this business is because up until really recently, spring wheat had been a cash price discount to hard red winter wheat. So a lot of these mills in international markets say, hey, if I can buy spring wheat cheaper than HRW, I'm going to go ahead and do that. So year on year, a lot of what we've lost to the Philippines and to a lesser extent Taiwan and Thailand has been made up from some incremental homes in Mexico and Nigeria. Iraq is one that's really interesting. That is pretty fresh news. That traded only a couple of weeks ago and is expected to be between 150 and 200,000 tons of spring wheat. And what's great about that is that it was expected that Iraq would buy Canadian, but they instead chose to buy the high quality wheat that we raise here in the US. Flipping over to domestic markets, which I mentioned earlier, domestic millers are also closely watching what those intermarket spreads do. And Up until this point, they've been using as much spring wheat as they possibly can in lieu of the more expensive HRW, but I expect that we'll start to see that change given this last month's price action between those two classes. For futures direction as we move forward, wheats are a little bit without a rudder, and by that I mean there's not a real fresh story for either the bulls or the bears. So I would expect headlines to really impact daily price action. But a few items of note to touch on would be that the US is still very, very expensive in global markets. So much so, in fact, that a major US miller recently purchased a cargo of wheat from the European Union to bring into their Florida wheat mill.
Wow.
So that kind of paints a picture for how the US sticks out on the global scale. And beyond that, I think that traders will closely watch any new developments in major wheat producing areas, as well as the war in the Black Sea.
Yeah.
So
definitely a lot driving the markets, and just another prime example of the importance sitting down early, taking a look at your cost of production, and then building your marketing plan based upon your cost of production. It really does help ease some of the emotion behind pulling the trigger, especially when we're seeing swings of 50 cents in a day up one day and then 50 cents down the next day. So just be sure to get a hold of your local Columbia Grain merchandiser, get your marketing plan put together, and get those orders out there and working. Take a look at some of the accumulator contracts that we have, or just the standard traditional hedge to arrives or cash contracts, whatever it may be, just something to help alleviate some of the risk that we see inherent in these current market trends that we're seeing. But Sam, thanks a lot for coming in and giving us that rundown. That was a lot better than what I could have done earlier this week. I can tell you that. And remember, once the plate of cookies goes around the table, take one or two of them.
that's right.
Have a great weekend, everybody, and we'll talk with you next week.